Welcome to Market Call for the hour. David Burrows is on our show. He's President and Chief Investment Strategist at Barometer Capital. Great to see you.
Great to be here.
He will take your calls, emails and tweets on North American large caps. So let's put that number up, the legendary number, 1-855-326-6266, or send an email to marketcall@bnn.ca, or follow me, you can follow Market Call on Twitter. Follow me as well. I'm at, what is my Twitter handle? Andrew Bell, BNN, or at Market Call. Or you can upload a video question. You film a quick question on your device and put it in an email. Remember to put video questions in the subject line. Or if you're under 45, you can do it on social media using Twitter or Instagram. There's the handles you have to put in at Market Call or BNN Market Call. David, great to see you.
Great to be
After
here
all
today.
that housekeeping. You reckon there are enough people with long faces in the market, pessimistic, and there's a lot of them, and that's giving you some cause for hope here.
It's really interesting. Look, at the end of the day, we all have only so much patience, and markets made highs in the end of 2014 and have been chopping along sideways ever since.
Let's do a 10-year, the S&P 500.
Sure.
Carry
absolutely.
on, David. Yeah, okay.
So it's interesting. Market made a new high, broke the 2000 highs in the beginning of 2013. Very nice rally off those highs into the end of 2014. Since then, the market sort of meandered and chopped its way sideways over the last 18 months. And I think a lot of people have worry about the fact that over the last 15 years, every 3-4 years, we get a really big decline in the market. So lots of people in February this year called for sort of the end of the cycle, and we're headed into a tough market. Interesting low, though, at that time, despite the fact we were close to market highs, a lot of pessimism, a lot of bearishness.
And you're still seeing that.
So markets had a great rally off the February lows, pulled back a little over the last 4 or 5 weeks. Interestingly, again, despite the fact we're near highs, short interest in the NYSE is near all-time record highs. Negative sentiment, the number of bearish advisors, is close to where it bottomed at the worst point after the crash in 1987. So there's tremendous bearishness and shorts in this market. Yet on the other side, we see from our breadth models, healthy markets. So it's interesting, when the market tried to push below the lows at 2030 on the S&P last week, market regained it on the day and has had a big bounce since then. So I think there's a lot of people on the wrong foot in this market. And we are quite bullish and think the next couple of years are going to be very good for equities. Yet so far this year, $90 billion has been pulled out of equities in favor of other types of assets. So when everybody gets on one foot and it's negative, there isn't a time in history where you headed into a bear market with everybody pre-positioned on the short side or negative. When you start into a tough market, it's because people are overly invested, too far exposed, too optimistic. And so I think that this is a great contrarian indicator, and I think things look pretty good.
What about oil? Let's take a quick look at oil, maybe a 3-year chart for oil.
Yep.
Are you seeing any patterns there?
Well, look, here's the history. The history is when you have a bust in any asset class, after sort of a 2/3 decline, which is really what we got in energy, you're likely to have a 40 to 50% bounce off the bottom.
And in this case, 80%,
right?
as you know. Yeah.
And then likely it chops sideways for a period of time. So in the tech bust after 2003, you had a great rally, and then 10 years of sideways. The same thing happened in the financial crisis. You hit lows, the market bounced for banks about 50%, and then sideways for 7-8 years. And I think that this is more of a trade than a long-term investment. The energy trade is likely, doesn't have tons of legs to it, because the reality is today, when you drill a hole, you've got close to 100% chance of success. It takes about 12 days to turn on a new well. We get much above the cost of production, which for a lot of people is around $50. You're going to see production come back on. So it's hard to see a significant bounce from here in price. Although in the near term, there are some winners and some losers, some really efficient folks, strong balance sheets that can be taken advantage of.
Yeah, it's fascinating. Yeah, we've yet to see how much of this U.S. shale will come back. You're dead right. Yeah, and they're still producing about 9 million barrels a day in America.
They can turn production back on very quickly. They can turn rigs back on very quickly. That's not going to be a problem.
We're going to be right back with David Burrows. He's President and Chief Investment Strategist at Barometer Capital Management. He's answering your questions on North American large caps. The number 1-855-326-6266.